Hello, and welcome to the second episode of the Yield Show. Oh. We're back again. Me and Kiet are back again to find out
back,
the
baby.
best places. Yeah, the best places to put your Frax assets to work. And you know what? Looking back on the last episode, Kiet, I think we were pretty spot on because at the time, we were thinking long ETH and then get a little bit more long, and that was true because we've gone up a bit, so like that yield would have been pretty decent. So I think we're gonna be spot on with this one as well too, and find some nice yields as well too. So I think I'm gonna let you start this time because I think you have a few more than me, and we can just roll with it. So why don't you start with your first top yield in the Frax ecosystem?
The way I broke it down for me was all the Frax assets, the FXS is Frax stables, Frax the stable coin paired with a stable coin, Frax and paired against non-stables, FXS and FRaxETH. Those are the four products I chose. So for the Frax stables, I decided last time we did this, I said to go with the DOLA Frax BP for 18%. Now this time around, I decided to go with something a bit more, I would say safer and a bit more friend of the show. And I'm choosing ALUSD Frax BP at 10% APR if you were to lock it into the Frax gauge. And my rationale behind that is I believe the Alchemix team and just earning that yield of FXS ALCX is probably going to pay higher than 10% given at these current prices. So I think this is a good way to get some Alchemix and kind of like the resurgence of DeFi 1.0, the comeback per se. So that's what I have for Frax stables. And dude, it's 10%. So it's pretty solid for just stables on stables regardless.
Exactly. You know, a lot of the pools which had like low, I mean, the APY is doubled, right? So we had the halving, which took everything down, and then we had the roll down to like 4, which took everything down even more. Now we're back up to 8, and we're starting to get healthy yields again. That's actually really nice. I like that one. That's very good.
Yeah. Thank you, sir. Thank you, sir. All right, what you got?
Did you have any more stable swap yields?
No, I just chose one for one.
Okay, yeah. So actually, I can pair my two together.
Each. Yeah.
Yeah, so I can actually pair my two together, and this is really interesting, right? So I got word in the Telegram chat a couple of days ago. Actually, it was 2 weeks ago, maybe a week ago, about an airdrop. We all love airdrops,
right?
There was a new project on BSC called Thena. It is a Solidity clone that just launched like a week ago, and anybody that has VFXS is eligible for the airdrop. And that means that for every 50,000, or sorry, for every, how much was my airdrop? I actually got a decent amount, right? I think let me see about this. So so these prices, I think for every, for every like 10,000 VFX you have, you got like, I don't know, 1.5 BNB. Is doing some math off the top of my head. So that's like close to $500 in an airdrop. So I'm going to pull it back up. We'll go we'll show the airdrop page, or I'll actually show the website and we can check it out. So let me pull it up. All right. So this is Thena, right? It's a Solidity fork. And what's cool is they have the airdrop. So you can come here and you can connect your wallet to see if you got an airdrop. And it was actually pretty good. And the cool thing about it is they have some great yields on Frax right now. And this is actually going to be my first 2 picks. So there is, where's the,
wow.
Sorry, let me go to liquidity. So right now, the APR for Frax BUSD is 16%, which is great. Really nice. And you're in 2 very good stable coins as well too. And then additionally, if you want to go FraX shares, the yield's 101%. And that's with significant size as well too. I mean, that's $500,000 in total staked on the FraX shares, and then $3.6 million in the Frax BUSD.
Good TVL.
Really nice. Really nice. And the good thing is that you can get your airdrop and then come vote for Frax and Frax shares, which is great. And I believe that Frax protocol, because remember how Solidity works, where they like give the NFTs to the protocols themselves and then kind of like let them vote. So Frax actually got one, the protocol, and I believe they're using it to vote for these 2 pairs.
Yeah, wow, Sam, you really ventured deep out there into the land of BSC. I kept the listeners in Ethereum land, so now you get the audience gets a choice of both worlds. So for my next option for the Frax and non-stable pair, and this one, I'm gonna stick with what I called last time, which is the CVX Frax BP pair, and that is earning 57%. So obviously, last yield show, I also recommended that same pair, and that was earning 32%. Obviously, with the rise in prices, it jumped to 57%.
That's really nice.
So I think it's a solid pair to be in, and you're supporting both ecosystem, right? The Curve ecosystem, as well as the Convex ecosystem, as well as Frax BP. And I believe if you have CRV like native, you can swap that for CVX CRV, and I think you get a little boost. It was like a 1 or 2% boost, just because the pool's a little inbound, and then pair that with Frax BP, and you earn 57%. I think that's just solid on both of those fronts. So that's what I would recommend for the Frax non-stables. And then for FXS, I'm going to steal a page out of your book here, Sam, and I went with the FXS ETH 1% UniV3, and that thing has printed about 120% APR, if my math is correct there. And I didn't use today's or the last 2 days is crazy price action. I used the 6-day average, so sorry, the 7-day average. So it's kind of normalized a little bit. Yeah, sure, it was like a couple of good days there, but I feel this is going to be representative, largely across the board. So it's going to print FXS ETH 120%. You sit on both assets that you like. I don't see how you could go wrong.
That's really nice. Yeah. The I always like that Uniswap pool, and I think it'll be underrated as time goes on as well too. So yeah, it's just I wonder if you would have been caught out of the range. I mean, because this is the thing that I had been thinking about, right? Because for the past,
that's fair.
Let me take a look at the chart. So since we dropped to 4 or 5, right? I thought it was really nice to provide liquidity because we were in these like flat markets, right? So now we're back in high volatility markets where we're starting to see these like big moves, right? And one of the things about those Uniswap V3 things is I think you have to be a little bit tight. So the ranges that I was setting on Uniswap V3 was like 4 to 7 or maybe 8, right?
Oh, okay.
Yeah. Or 4 to 7, right? Because that's where it peaked, right? It was like 4, 7, 4, 7. And it did that over the course of like 6, 7 months, 8 months. And so now, like we went 4, 7, 4, 7, and then we went to 9. So as long as you understand that like you're essentially out of the position at $7 and you'd have to fix the position again, you'd be fine. But for the past few months, that would have been really nice. The question now is like, is that Uniswap V3 position going to be, are we still in crab markets, right? Like when we look 6 months down the road, are we going to be at $8-9, right? Or are we going to be like 50? Are we going to be trending up? Is the question.
Yeah. Well, so for me, I feel like this pool is the TVL is low enough that I think you could go wider and still be okay. I might even say you could just do the whole band 0 to infinity and still be okay because it's not that large yet. There's also the other 0.05% pool, the 5 bips pool, which has like I think 300k TVL, and the APR on that it wasn't too bad either. So you could go into that pool and provide for the whole band and still capture pretty healthy amounts. So I think overall it's pretty good. And actually, let me think. I would actually go into that pool instead because both of those pools are. I'm sorry. Both those assets are legitimate. Uniswap is legitimate, and the reason why you want to go to the high TVL pools normally is that's a proxy for like safety, right? But because FXS and ETH and Uniswap, safety is like implied. So I would go for actually the lower TVL pool, and you might be able to capture more if you were to do a tighter band there. Yeah. So quick revision on my FXS strategy. Okay, Sam, what's yours?
I think, okay. So you're assuming you have some Frax shares, right? I think.
Yep. You start with some FXS.
Yeah, I really like the narrative right now, right? So last month's narrative was not Frax shares. We were like flat Frax shares, right? But bullish on ETH. I think this month, even though we've had a small move already, I think this month is going to be bullish Frax shares and maybe flat ETH, which means that I would be thinking about depositing Frax shares into FraxLend and then borrowing against your Frax shares at a healthy amount, right? And then using that either to go and farm, so you could buy FPI is one option, or you could choose one of the other farms that you were talking about to move it over to BSC, right? And put it into the 13% pool, right? I think those are all really nice options. Or you could just use because if you think about like you're like getting Frax shares at this lower price, now at a higher price, you now have this liquidity that's unlocked to you where you can borrow against it at a very healthy rate. Like you're paying, I think 4% right now, 3-4%.
4, yeah, 4, yeah.
Yeah. So as long as you can beat that with your Frax shares, I think that's a healthy way to go.
Okay, that's fair. That's fair. I feel I like how you said a nearly 2x move is a small move, but yes, relatively, we're still pretty far from the highs here. And then for me, the next asset is the FraxETH, right? And I think you're gonna like this one because it's pretty hot. So you take, assuming you already have FraxETH, you put 100% of that into sFrxETH, and then you borrow Frax, and that will give you actually a net plus 3% because you pay 4% for that, and then you take that Frax and you buy FXS and you buy ETH, and then you LP that into the UniV3 position to capture another. Let's say you took 50% so of your sFrxETH collateral. So now you have a UniV3 position that is earning 63%. Remember, it's only half your stack. Plus, you have a stack that your sFrxETH is earning you 3% on top of that, minus the interest rate. So in total, you earn yourself 63% with this, and you have a leveraged long ETH position, effectively like a 1.25x on the ETH, and then you have a 25% exposure to FXS as well.
Okay, let's talk about this again. So you're taking the taking stake FraxETH, borrowing against it,
yes,
and then
yes,
at like a 25% rate, and then and then buying fractures with it.
50.
Oh, 50%, right? And
You
then
borrow 50%, yeah.
And then swapping that, or would you put it into a Uniswap V2 contract, or would you put it into a farm to make yield, or would you just buy fractures?
Exactly. No. I would buy FXS with 25%, and then I would buy ETH with the other 25%. So now you're fully deployed of your borrowed frax, and then you put that LP into a Uni V3 position, which is what we just talked about like a minute ago.
Yes.
And then you'd be earning around like 60%.
But not the Frax one, but the ETH, the WETH pool, the FXS.
Correct. FXS WETH. Correct.
Right. Oh, that's
so now you get some
insanely profitable.
Yeah. So you get some.
Can I share this?
Yeah.
It's just like, okay, so this is a Uniswap V3 fee calculator. So the fractures WETH pool,
nice.
1% fee. Right.
Yeah.
So let's say you have $100,000 position. Okay.
10K. Remember, the thing was 10K.
Okay. So
our yield shows 10K. Yeah.
This is great. So if your position range is like 169 to 12, right, which is fractures in terms of WETH, right? You could probably get a bit
but what
tighter.
Does that translate to really?
You could probably get a bit tighter. Let me see where the. Just depends on how much you adjusted. This is what they automatically pick for you, right?
Okay.
But it seems that you could probably get it pretty tight. And did I break it? Oh my god!
No.
I broke it.
Is that you, or is it just doing it by itself?
Okay, let me try this again. Let me refresh. I broke it. Okay. Let's try this again.
Wow, now it's just dancing.
Okay, so fractures WETH. That was weird. It really doesn't. Okay, so fractures WETH, and it has a range from 169 to 214. And we have 10,000 in the pool, right? That's $64 a day. That's 235% APY. I might even do that. That seems awesome.
Dude, I really might be doing that like shortly after this call. I just thought about that today.
Because then you have because if you rebuy the WETH, right? You're borrowing, or you have ETH, you borrow dollars, and then you're buying ETH. So you're a little bit leveraged on the ETH, and then you're buying some fractures as well too, and then earning 235%, right? And it's in a range pool where, like, if it goes to one side, you're fine, right? And typically, let me see if I can get like a FraxShares ETH. FraxShares price.
They both have pretty high beta, right? So I was thinking like they both have pretty high beta. So if BTC were to move, then ETH would definitely move, and hopefully FXS move too. But we have all seen how FXS just doesn't move when everything else moves. So
right. So I think
there's that, and no matter what,
So this is the ETH price. Well, this is FraxShares in terms of WETH, right? And wait, can I invert this somehow? Let me invert this.
Yeah, can you invert it so it lines up with what the calculator was saying?
Let me see if I can get the calculator to do things in terms of.
In terms of
ETH. It won't flip. It's in terms of so this is FraxShares in terms of ETH, but even still, I mean, that's a pretty tight range, right? You think about it, like that's a much tighter range than the dollar, right? Because this is less.
What was the range again? Go back to the calculator.
It's like 160. It's in terms of so it's 169 to 214. And I don't know.
Okay, so that's $9. That's $7 to $9. That's $7 to $9. I just took the price of ETH and then divided it by the number of FXS. So if you were to do that, you get 9 and 7
Yeah. And look at the
Which
swap.
is not,
Maybe it's just skewed a little
you know,
bit because of the swap volumes, but like even still, like
yeah,
even before it was making, like a couple of like 350K a day, which is pretty decent, right? That's like $3,000 a day. Like, and you could probably be a little bit tighter as well too if you're smart and watching the thing.
I think the yield on this is great. Though I do feel the price appreciation is really the play. And that's the real bet. The yield just makes it nice in case your bet goes wrong.
Right.
At least you could print 63% waiting for a year for it to go back. So I think that was my rationale for it. It's like if your bet goes wrong, at least you could sit pretty and have 63%
I actually like this
and
for
plus,
the next month though.
Yeah.
I like this for the next month. You know what's going to be nice?
I will probably be putting this on right after the call.
you know what I'm waiting for is the FraxLend pool with stake FraxETH where you borrow like either ETH or FraxETH against it. Yes. Or like
I want to borrow,
or sTETH. You know what would be
so
make the most
I have
sense?
another
You know what would make the most sense is using stake FraxETH as collateral and then borrowing sTETH against it with like a 3% or like a 2% collateral rate. That's what we need to get at. That's the real flywheel, right? Because then you're injecting like with either a 2 or 1% collateral rate, you could get up to like 40 or 50% 40 to 50% x leverage on that thing by just running over and over again.
So it's basically doing a pairs trade between FraxETH and sTETH.
It's like an interest rate. It's like an interest rate trade, right? Because like you should be like delta neutral because
spreads.
You're both in ETH. But then you're long, you're short sTETH and long fracture or stake FraxETH.
Yep.
Which then you could get an interest rate difference of like 3 to 4% there.
Yep. As long as FraxETH earns higher yield than sTETH, then that trade minus the interest rate, that trade will always be printing. Not a bad way to just print like 2-3% a year. Just
can't do
casually
soon.
No. I mean, I think
look,
you would have to do sFrxETH, borrow Frax. Yeah. And then you would have to take the Frax into Aave and then borrow the sTETH from Aave.
Right, because Lido's APY is 5.72%, which seems high, right? I think that's including other stuff.
Mm-hmm.
But like the base APY for sTETH is quite low, and then they throw their token on top. Let me share.
Okay, find out
this one. So
I mean, I'm pretty sure that token emission.
Oh, it's 5.2%.
It's going to be factored in, though, is it not?
Yeah, it's 5.2% for the last 7 days versus on FraxFax.
It's like 6.7 or something like that.
Let's see. Yeah, right. So it is 6.34, right? So that's a 1.1% difference. And if you could lever that up 50 times, now you're really getting somewhere. That's what we really need.
Yeah, you're really printing.
Again, Drake or Sam or
I'm pretty sure
Jack or anybody from the core team, if you're listening, like this is how we get
an LSD on LSD interest rate spread is hot.
Exactly.
That's hot.
Well, remember that was the whole thing that led to the 3AC blow up and Celsius and everyone else is because they were just leveraging
that's what they did.
sTETH trade. Yeah.
Well, no, it was because they were leveraging that Terra trade, the UST anchor. Like they just did the ARB spread to get the 20%.
Yeah,
they
but
just
remember
borrowed for cheaper than 20. After that, they did the sTETH thing. Oh, I forgot.
Yeah. Remember when there's like thoughts about sTETH depegging?
The sTETH depeg. I remember that.
Yeah, when it went to like 95 or something like that, there was a lot of like commentary about how sTETH was going to like blow up everybody. The reason is because everybody was like 5 to 6 or 10x leveraged on the sTETH trade, and unwinding that at an institutional level would have, on Aave, it'll be FraxLend.
Yeah, I remember.
Yeah.
That'd be a fun one. I was going to also say, like, for those who are looking to hedge a bit, it is also possible for you to do FraxETH, turn into sFrxETH, borrow Frax against that, deposit that Frax onto Aave, and then you can borrow, say, WBTC or some other token of your choice and kind of sell that, and you can have, reduce your delta and hedge a little bit from your sFrxETH. Honestly, Sam, like for me, if another pair they could do is sFrxETH and WBTC on FraxLend, I think I would love that. Because I would just put that trade on. I would try to match it as much as I could, 1 for 1, and then just let it ride into infinity. Because the flipping is coming, right? Like I can't feel like, we could say that out loud now. And if that were to be true and it's just a matter of time, then putting on a trade like sFrxETH, which lets you earn the native staking yield, plus being able to short BTC and bet on that spread. So in dollar terms, your deltas are pretty, hedge well there. But in terms of like, upside risk to reward, I think it's the highest paying one.
Wow, that's a really smart. Come on, Drake, add some more collateral types to FraxLend.
I know.
It's okay.
Man, he's busy though. He's busy though.
When we get FraxBTC, then we can set up that trade.
Oh yeah, that's perfect. You're right. Not WBTC, FraxBTC. That'd be perfect. I only want to use Frax products, so everything is in house. That'd be sick. Dude, imagine that there was like a product where it just does that for you already. It's like, hey, just deposit Frax here, and then like the stable coin, and then we'll do this trade for you. We just buy some sFrxETH, and then, or rather, we'll buy some ETH, turn to FraxETH, stake it into sFrxETH, borrow some WBTC for you, sell that, and try to get you as close as possible to delta neutral. I think that'd be so dope.
Yeah, I'd like to see us copy some of the other products out there. So like the 2x FLI product that Index Scoop has, I think we could do that with sFrxETH, where it's automatically holding like a specific collateralization ratio over time, right? That's the kind of product that I want to see, is like a 2x leveraged or a 3x leveraged sFrxETH product, where like as the price of ETH goes up and down, the whatever protocol on the back end is like adjusting it so the collateralization ratio. So if the price goes up, the collateralization ratio goes down, and so then it borrows more Frax to then go buy more sFrxETH and then deposit it and then rebalance everything. Or if the price goes down, then the collateralization ratio goes up, and
Yeah, I'm familiar with this. It's like the ETH 2x Fly product by I think the Set guys or someone, I forgot.
Set.
Yeah. I think both of them work very closely together. Anyways, so I think I forgot there was a study being released about that, where the streaming fees or like the rebalancing cost or something makes that trade, it's just a slow bleed, and plus the liquidity for that is quite bad too, if I remember correctly. You just have to kind of let it go, and that one is just a hodl product, I think. But I forgot what was the research piece. But usually these index products on chain is just expensive to rebalance.
Yeah, but what happens when we get to like Arbitrum or Optimism or somewhere, or like once they have dank sharding and the cost for L2 transactions goes to like?
Oh, I don't think it's the transaction cost that's expensive. I think it's like the lack of liquidity, and I think that's probably the main reason is the lack of liquidity when rebalancing, because you are arguably the largest holder of this, and then to get in and get out and to like reclaim.
Well, it shouldn't be a
There was a
problem.
study. I wish I could find it.
It shouldn't be a problem for Frax, right? Because you could AMO all the Frax that you need into the product and earn a fixed yield on it. So you could charge like a 1% or like a 0.5% fee on it, or 1% fee or something APY, and then you just swap everything through FraxSwap, right? So because what do you need to do? You need to borrow Frax and then go buy FraxETH on Curve, right? And then stake that ETH and then deposit back as collateral. I think there's a lot of liquidity there actually, and especially for like you think the size goes up, they're continuously. So what's cool about it is like as the FraxETH price goes up, it's always giving more bid for FraxETH, which is going to create more FraxETH over time because it's going to push the price higher, and then people will arbitrage into it by selling ETH or like minting more FraxETH and then selling into it.
Yeah, no, that's also fair. I was thinking of like all these collateral, like all these leverage products and structured products. It's really symbiotic with Frax because Frax obviously has all the stable coins. And if there's a lot of people who demand like, hey, we want more of these leverage products, Frax could theoretically do an AMO where they can mint Frax against, this person's collateral or this person's assets so that they can create the structured product. And like you said, charge that 1%. That's actually quite interesting.
Yeah, and you can do it all through FraxLend as well too. I mean, it's just like a private FraxLend deployment. Remember how Drake said like you can create, the cool thing about FraxLend is that you can have like individual deployments,
term sheet, like
term sheet, right? Where like this would just be, you could have a protocol that deploys a FraxLend instance just for this product, right? So it doesn't affect the other like variable rate one, and then you give certain specific terms to Frax to print AMO funds in there. So you could say like you're going to charge 2%, right, or sorry, you charge 4% or something like that on the fees, right? So on the borrow fees, which would essentially, I mean, you can do some math, figure out whatever you need to do to make it a 2% overall fee on the year, deposit AMO funds in there, and then just let the thing run autonomously.
Yeah, no. I think I think this one is definitely onto something. We should suggest this to Drake for sure.
Yeah, we can talk to him about it. All right. So did you have any more?
No, that is it, my friend.
Nice. Well, that was good. I enjoyed this. We're gonna go. I think the trade of the time is bullish. So like ETH, ETH collateral or stake FraxETH collateral, borrow it, and then LPing ETH Frax shares. That is really nice.
WETH.
And then earning
WETH and
really nice yields. Yeah, WETH.
Yeah. So
really cool.
I think that trade is quite good. Okay. All right, Sam, you want to sign us out?
Yeah. So I hope you guys enjoy this. This is episode number 2. If you like what we're doing here, leave a comment below. If you have your own strategies and you want to share it with us and you actually want to come on the show, we would love to have you here because, we're still a little smooth brain about everything. So if you're like super smart and you're building some amazing Frax strategies, we would love to have you on, and we would love to hear some alpha from you because we want to talk yield and we want to hear how you're making yield in the Frax ecosystem. So you can find me at traders_insight, and you can find what is our new Twitter handle? It's Flywheel Fly for the moment.
And you can find me at 0xcapital_K.
We got some cool stuff coming. Isn't that right, Kiet?
Peace.